How's it going? It's Rocky. Would you be impressed if I told you that for the past 4 weeks, I was able to recover $24,000 from trading the futures market? Now, if I followed that statement by saying 5 weeks ago prior to that amazing run, my year to date on my profits for trading the futures was at negative $65,000. Would my statement about the last 4 weeks now seem less impressive? Welcome to week 45, where I share my experiences trading the futures market. What I'm showing here is the chart for the week, where every candlestick represents 1 hour. And what I'm showing right now is the MYM, which is the micro for the Dow Jones Industrial Average. And something I wanted to point out was Thursday was a pretty monster run. You probably read a lot of articles about it because it's one of the largest intraday run in the past 2 years. And what's so amazing about this is like when the market opened on Thursday, you can see this candle right here had a range of 902 points for the Dow Jones Industrial Average. However, something that I want to point out is everything is relative, right? Because this run may seem amazing. However, if you look 2 days ago where the peak was, the peak here was at around 33,362. And just to highlight that, I'm going to draw this line, and you can see that the peak on Wednesday more or less got to where the support was on Thursday and Friday. So as amazing as that run was on Thursday, relative to looking at it a couple of days ago, it really isn't that impressive. It's just part of this general trend that is occurring, and a lot of folks are hoping that we are finally have hit the bottom from a couple of weeks ago. But who knows, right? It's just the market reacts depending on whatever the news that comes out. Either it's baked in or not. But based on the CPI reports, it's definitely a good sign that it seems like the inflation is starting to slow down. And that's a good thing because that means that people are hoping, due to this news, that the Federal Reserve will then slow down the interest rate increase that they've been doing. For our trade analysis this week, I'm going to show you this trade that I did on Tuesday. And you can see here I had shorted 10 contracts at 33,340.8, and I was able to cover that at 33,305. So I'm going to bring the calculator here so we can do the math on that trade there. Basically, we were able to, short at 33,340.8, and then we covered at 33,305, and that's essentially 35.8 points. Multiply that by 5, that was essentially $179. And there's a reason why I want to show this trade, because I missed out a lot on this trade, but that's just how it occurs. So when I trade, this is normally what I look at. On the left is a 5-minute candle, that's the time-based chart, and on the right is a tick-based chart where I'm using 512 ticks for each candlestick and using Heikin-Ashi candles. You can see that the reason I had entered here, if we're looking at the tick base on the right here, is a crossover just occurred in the MACD. And basically we were on the oversold side. So during the day, when there's a lot more volatility, things are a lot faster, I trust the tick base a little bit more. And of course I use the time base and a bit more of as a reference. You can see here, you also had crossed over. However, it wasn't quite at the oversold side just yet. And that's where I first shorted with 6 contracts, followed by 4 contracts. And it was pretty choppy. And I had pretty much placed my OCO at this time. So, started that trade at around 906. And then we ended it at 932. And it's one of those where I always tell myself, right? When you trade, what matters is just when you started and when you ended. What happens after that doesn't really matter. However, if you look at this tick-based chart, you can see that, I drew my average there, right, of when I shorted. If I had left this alone, I would have made another 500 points. So that would have been $2,500 that I had left there. But because I've been focusing on my risk management and really just my discipline, I am happy how this turned out, even though, I could say, hey, he could have made a whole lot more money. It's one of those where it could have gone the other way too, where it could have gone up and I would have lost that $2,500, right? So something I'm doing a little more, putting more emphasis in this journey of trying to get back to break even is really just taking my small gains, keeping my OCO tight. So OCO is one cancels the other, where I put a limit on one side and trailing stop on the other side. And that way I'm really just limiting my exposure. And it's something that I'm slowly improving on, but still a long way to go. So here's another trade analysis that I'm going to do, which occurred on Thursday. And if you're looking at this chart here, I essentially shorted 10 contracts. Actually, let me take that back. I actually shorted 8 contracts and I ended up covering at a loss. And I just want to point out that I shorted and look at what I could have gained there. So my trade analysis today was really focused more on what could have been. But I just want to highlight how, since I'm focusing on my risk management and keeping things tight, sometimes it goes great, sometimes it doesn't. But the overall lesson here is that I am working on risk management. So I'll keep saying that risk management is so important, because that's how, I got to the stage that I'm at right now. Not having proper risk management has placed me in a very, very negative hole of almost negative $65,000. But thankfully, I've recovered almost $24,000 of that the past 4 weeks. And I am trying to get to break even by the end of the year. So we have about 8 weeks or so to accomplish that. Make that 7 weeks. I'm really hoping for a great Santa rally this year. So want to point out on this trade, again, on the left, it's the time base. On the right is the tick base. And I had shorted this because at the time of entry, on the time base, again, I don't pay attention as much during the day because it's so volatile and things are so fast. But if you look at the tick base side, the MACD had crossed over at that point when I did enter, and we were on the oversold side. But since things were so fast, I could have made a little bit of money, but I placed my OCO right away to protect myself. And you can see there was a bit of upswing there, and that's why I was stopped out. So I lost some money there, but I just want to point it out, like, the intent was there. I was just a tad bit early. If I had waited, 13 minutes, I was stopped out at 8:39, and then if I had waited 14 minutes to 8:53 and I had shorted there, let's say I shorted about 32,900 or so, that would have been about 400 points that I could have rode, right? But again, I'm pointing out that sometimes having that risk management will have you miss out on these extreme aggressive runs like this one. But trust me when I say that it's better to get the small wins in a small time period, because sometimes long exposures like this, especially if you're over leveraged, could be quite problematic. So yeah, those are just the two trades that I wanted to share on how I've been focusing on my risk management. I've been hedging with the MYM, which is the micro, while I'm keeping my YM on a long-term bullish run, multi-week run until December 15th when the contract expires. So this is our account statement that I'm recording on Friday, November 11th, 2022 at 9:45 p.m. in the Pacific Coast. The chart that I'm showing here started on Sunday, November 6th to today, Friday, November 11th. Now, if we look at the description here from the top to bottom, I want to point out that I did not deposit or withdraw anything, but you can see that I'm trading a whole lot more contracts, but that's because I am hedging with the MYM. And if you're curious what I'm trying to do with the hedge, I have explanations on that on my Instagram post and YouTube post, and also you can check out previous content where I briefly discuss what's going on there. So I didn't deposit or withdraw anything from the account this week, so no variations to the calculation that we're going to do. So our ending cash for the week is $36,494.85. And then we will subtract our starting cash for the week, and our starting cash for the week was $26,900.93. And happy to say that for the 3 of the last 4 weeks we've been green, and we managed to recover $9,593.92 this week. So that brings our total to almost $24,000 for the past 4 weeks. If you're curious for the proof of that, please check out the past 3 weeks of content where I do review my account statement and show you exactly how I did there. And just because I enjoy doing this, I divide that by 40 hours, which is a regular 9 to 5 full-time in the US, and that would have been a hourly rate of $239.85. So yeah, that is our content for the week. It's been a strong recovery the past 4 weeks. Hopefully we can continue this. Again, it's all relative, right? Like what I mentioned in the beginning, I recovered $24,000 the past 4 weeks, and I think that's a pretty impressive feat. However, if I followed that and I said 5 weeks ago I was at negative 65,000 year to date, but now I'm at negative 41,000 year to date, are you still impressed or not? Let me know in the comment below. All right, thank you for tuning in, and I'll see you on the next one. Have a good one.